Again, it is a reversal. The markets are actually, holding up kind of well considering two biggest companies really, shit the bed here. And not that Microsoft shit the bed, but I want to really talk about those numbers even more, Daniel, because when you're looking at cloud, which is their growth. Now, growth is very, very important because all these technology companies, they all have this crazy multiple because of growth and where that's heading, right? So you deserve the premium based on the future of the company and growth. So when you see cloud grew, and you mentioned it's 42% constant currency. Again, constant currency is the name. You're going to remember that. You're going to hear that reporting with earnings pretty much for the next 12 to 24 months, right? It's constant currency. They didn't say anything, right, when the dollar was lower because they generated massive profits off of it. They don't say, constant currency. No, now they're going to mention it, right? Now they're going to mention it, which is great. But they said it's going to start at 35% constant currency, which is the real number, right? You have to include that. It's the real number, 35%. You're like, 35% is still amazing growth. You're right, but it's much slower than expected. Now, you're looking at, you said, well, let's take into account how much that is, because Intelligent Cloud Division, which is Azure, generated $20 billion in sales. 7% of that is going to be lost due to currency, which is $1.4 billion in revenue. Just in that division, $1.4 billion in revenue for the quarter. How many companies do you know generate, $5 to $6 billion in revenue for the year? This company is going to be losing $6 billion in sales for the year simply based on currency. And again, that is not going away. The dollar's not going to come down significantly from here, and all of them are predicting that it's going to get worse going forward, right? We're seeing a rebound here in stock, just like we saw exactly 3 months ago when we looked at July into August. And I don't want to be like this Debbie Downer and stuff. I just want to tell you that this is normal to see a market like this, and you're like, well, stocks are down so much and they're rebounding because earnings are strong. Earnings are not strong. That's bullshit. Okay, the Fed is not stopping. If you really think that stocks are going to rebound and have a great fourth quarter, and the Fed, which is going to see the CPI, the core CPI, has not peaked yet. It's not peaked, and it's not going to peak next quarter. The number is going to be much, much higher even for CPI in general, but core strips out food and energy has not peaked, right? So the Fed is not stopping. So I don't know who believes the Fed's stopping. I thought that they would stop. I was wrong. They're not stopping. They're going to go to at least they're going 4% in November 2nd. Then they're going to go to 4.5 to 4.75 by the end of the year. They're not going to stop there, especially if the market, you're going to see the market come back. You're looking at UPS. UPS beat the numbers. Why? Because they raised prices significantly. Why did Coke and Pepsi beat? They said they raised prices significantly. People are still raising prices. Companies are still raising prices. So you're still seeing inflation out of control. It's not giving the green light for the Fed to stop. Or saying, hey, you know what? Here's what we got to do, slow down. So you're going to see rates go higher and higher, even though mortgage rates are well over 7%. And I just heard a stat from one of my friends in the industry who said that they're a big builder and they just saw lumber. So that, they ordered lumber. They said 50% of the contracts in lumber that they ordered have canceled. They canceled. So they don't no longer need them. So 50%. So they had this whole huge lumber contract, and they said they 50% of those orders were cut. 50% of those orders. And that's what you're going to see across the housing industry, because, we're not even at, with 7.2, whatever it is, but it's going to go higher. But when you look at Microsoft and you're getting back to this currency thing, it's, that's a lot of money, 1.4 billion, right? So when Microsoft says cloud division will grow 35% in December, it's really saying 28%, because that's what they forecast for. They said cloud's going to grow at 35% in December. That's really 28 when you're accounting for currency. And you're saying, wow, Frank, 28 is still pretty good. It's good, but it's a big deal because cloud grew 50% from the December to December quarter last year. So you're basically cutting growth in half for Microsoft, but yet you want to pay that same multiple of 24 times. Right? Now you know why the stock is getting hit today, even though those numbers look pretty good. And they looked a million times better than Google. Google's costs are through the roof. They're going to have to fire tons of them. They're in a lot of trouble, Google. YouTube is done. Snap is done. You're seeing the social media and the ad revenue. That is not just, we're seeing a slowdown in business. There's a secular change to this business model that doesn't work anymore. You no longer steal everyone's data, and that's why every single company is getting murdered who has their app, who relies on Apple for a lot of their business, which is most of their mobile online business, right? It's going to happen through that app. And the fact that they can't take everything that all the data now, you're seeing these companies, and this has been happening for over a year now. But now it's even worse. Now you're seeing into recession. So when I look at these numbers, I just think you have to be really careful here. And again, Snap said something on that call, which was interesting that, again, they're all fighting for time. Right? You want these guys on the platform as long as you can. That's why Facebook was such a big deal, because they were on the platform. People were on there for 20 minutes, 25 minutes on average. TikTok is stealing everything away. That's why you're seeing YouTube numbers go down. Snap said they saw a 5% decrease in the amount of time spent on that app. That's TikTok. They're all going to short video format. TikTok is wrecking these companies right now.
Meaning TikTok's taking market share.
Oh, they're taking market. Well, you're on your phone, right? You only have a certain amount of time per day. You're not going on Snapchat now. You're not going on Facebook now. You're not going on YouTube now. You're going on TikTok. So as you take that and the advertisers see that, now when you show you statistics, you're like, holy shit. I mean, it used to be 15 minutes, 5 minutes of your time. You get 5 minutes of someone's time on your site. I mean, that's worth billions of dollars in ad revenue. Right? 5 minutes of everybody's time a day. But now that extra time that you have, whatever it is, it's going towards TikTok. People love TikTok. And I'm on TikTok. It's the best social media platform. It's not like this fun thing. You could be an adult. It's going to give, if you're into golf, it's going to have a whole bunch of professionals you never heard of showing you golf tips. If you like funny stuff, they'll show you funny stuff. If you're conservative, liberal. They're going to feed you what you want with these short videos, and people are creative, and it's fun. It's easy. You zip right through it if you don't like it. It's the way they have that platform set up is just a million times better, but it is impacting. And I just want to make that clear to everyone that this isn't temporary. This isn't like, oh, the slowdown from COVID. This is like a secular change in the business, a fundamental change, where you're going to see earnings continue to get hit for a lot of these companies. Maybe not Microsoft. They are LinkedIn, not too much social media in terms of overall revenue. But when you're looking at Google, when you're looking at Facebook, these companies, I know they got hit already, but those earnings are going to slow dramatically. I mean, you're looking at paying 70 times forward earnings for Google, where revenue and earning are probably not going to grow year over year. That's very, very expensive. Or 25 times for Microsoft, and you're seeing growth so dramatically now. So let's see what happens in the future. These are the companies, but I don't know if you saw anything. This is just from today and yesterday, but the market is being resilient here. It is coming back. You're seeing yields come down. You're seeing the dollar retreat a little bit, but again, that's expected. The Dow is holding up much better. But I'm surprised the NASDAQ is not down like 2% or so, being that two of its large components are down, are getting wrecked today.
That is impressive. Last thing on the earnings from me is that Meta, you keep calling them Facebook, Frank. That's rude in today's world. They changed their names.
Well, it's supposed to call Google Alphabet too. So.
Damn. That's darn.
So there you go. Right back at you.
Meta, exactly. See? Meta reports today. Speaking of the data, looking at privacy, data.
Doesn't Amazon report today?
All that kind of stuff. I think they do Thursdays.
Okay.
I think Amazon's typically a Thursday. Mm-hmm. But Meta, the only thing that I care about on Facebook earnings is how many shots they'll take on Apple for the privacy that Apple implements through their system. Because as you said, that has a huge effect on Snap and different things and advertising. That's really the only thing that I'll look for in the Meta earnings, that and the loss that they're going to take on the metaverse, and then the corresponding funny news articles that will follow about that. That's the only thing that has my opinion. What's next?
I mean, look, a couple more earnings here. I have Moody's missed and then guide significantly lower from 950 to 820. I'm saying Moody's because the number is big in terms of earnings, $9.50, right? That's how much they earned compared to 820 next. This is for next year. Look at that discount, right? So you've seen another 10%. And this is Moody's saying this, right? So analysts are going to come down. You're going to see estimates get dramatically lowered. So if you're looking at the S&P 500 and people on TV are telling you it's trading at 15, 16 times forward earnings, it's bullshit. It's 100% bullshit because that's based on the earnings number that's going to come down at least 10, 15%. I think it's going to come down more than 20%, that earnings number. I don't know how we're going to get to 240 next year, which is still the number right now, which is 7% growth. I think the number could be under $200 a share. And I mention this over and over. It's a big deal because earnings drive stocks. In 2019, at the end of 2019, we were trading at $160 in earnings for the S&P 500. Right now, they're expected 225 in 2022 and 244. And the reason why we got over 200 is the $11 trillion that was spent. Now that's being removed from the market. And when we were in 2019 at 160, we peaked. We actually saw earnings slow from 2008 to 2019. Not much, but just by $1, but it slowed. And rates were at 1.75%. They're below 2%. We're going to be over 4%. We're probably going to be over 5%. I thought it would never go over 3.5% next year. We're going to be definitely over 4.5% next. I think we're going to be over 5%. If we're going to be at 4.75 at the end of this year, we're going over 5% because the CPI numbers are not going to show any decline in inflation, and you're seeing it. The companies that are beating are raising prices. It's not because they're selling more stuff. It's because they're raising prices. Just listen to the calls of Coca-Cola, Pepsi, UPS. Good for them. They have pricing power. That's awesome. But does every company have pricing power? You've seen Chipotle starting to get nailed. I noticed. I go there and it's like $60 when it used to be $40. And I'm like, oh, let's eat someplace else now. So it gets to the point where enough's enough. You're seeing that across a lot of businesses. You're not seeing the airlines. You're not seeing it too much in travel, hotels. But there's a few notes before we go here, Daniel, that I want to mention is be careful with currency. Okay, I just told you how much it impacts some of these companies. When it came to Nike and they reported, they told you because of currency next year, they're going to lose $900 million. That's 1/5 of their operating profit due to currency. Okay? Due to currency. That's massive, a 20% decline. That wasn't really being factored in with just a normal recession. Now you're looking at two growth engines. Why do we grow so much, Dan? Why do we grow so much over the past 12 years? Well, we had a Fed, right? The Fed was the biggest growth engine, zero rates, and pouring money into this market, buying bonds.
The list would be Fed, China.
Fed, right? And then China. But you look Fed, and that's gone. That's not here. It's not going to be here for a couple of years. Fed's not there. And then you have China, and China's a disaster. So any company that's linked to China, listen, Nike operating profit. So not only is it currency, but you're also dealing with China in two ways, because you're not just getting hit from the slowdown in demand, you're getting nailed from the currency, right? We're not even talking about slowdown in demand. So if you have companies that have a lot of exposure to China, which companies went all in because they need to show growth, because they need to meet those estimates quarter after quarter, they're forced to, or your stock's going to get wrecked and you can lose your job as a CEO. You look at Las Vegas Sands, Wynn, Apple, Tesla, Nike, Texas Instruments just reported those numbers were not good. I'm surprised not down further. Down only 3% today, but I would avoid these names. Starbucks, Yum Brands. I mean, these are companies that went all in on China. China's disaster. Not only that, you're getting nailed from the currency. I don't know how these guys' estimates don't come down significantly from here. Let's see what happens.